All right. Today's SPY was down 0.07%, but it wasn't without lack of excitement after the gap up above this resistance at 455, and we did hit that price target, which if I zoom out here, you can see was the previous July closing high, which was just below 458, and we were met instantly by rejection and closed down near the low of the day, but we still haven't seen price action closing down below the 5 EMA, so we still can't say that this pullback is underway. That is likely going to take us back down towards this rising 20 daily moving average and or this gap fill zone right around 441. So it is looking like we have sellers up here, as you can clearly see with the rejections from 455 and now that previous July high. But if we do break through that high, it is going to be another short squeeze, and it's going to probably take us straight to 460 and maybe higher before we start the pullback at a later date. So keep in mind, there's no avoiding the pullback. It will be coming very soon. It's just a matter of when it's going to be here. And it's a matter of waiting for the price action to confirm that it is here. So the first sign that the pullback will be coming will be the breakdown below the daily 5 EMA, and then the loss of this support zone right around 450 to 451. And that should tell us we're coming back down towards 440. Until we see the price action breaking those support zones, we can't say the pullback is here just yet, even though this could be the first day of a pullback, because that is a very bearish rejection looking candle from a critical resistance zone. On the NASDAQ 100 triple Qs, we were down 0.1% today, and the triple Qs have yet another rejection from 393, because the last time we were rejected from there was back here on November 22nd, and we hit that resistance yet again, and we've also had a bearish rejection looking candle, but again, we did not break down below the daily 5 EMA, and we're still above the support zone between 383 and 386, which you can see the rising 20 daily moving average is starting to get up in that zone very soon. I still think once the pullback starts, whether it's from 393, 396, or all the way up there in the 400s, we are at some point very soon coming down towards this gap fill zone at 378, and that is going to be the pullback, which means if we continue lower, then we'll break down through that support and go to 370. In the Dow Jones, we were up 0.15%, and intraday we hit the next price target, which I told you above 353 we could get the breakout. That would take us to 356, and as you can see today, we did hit 356, and again, we did see sellers in rejection, but we're still above all the moving averages with the price action. If we break 356, that's going to be a break of the July high, and that means we're likely going up higher towards 360, and the support to pay attention to at this point is still 353 and 350, and if we can't hold that support, we come down here towards 344 to fill the gap. On the Russell 2000 IWM ETF, we were up 0.53% today, and again, we tried to break that critical resistance zone at the negatively sloping 200 daily moving average just below 181, but we were rejected with a bearish closing daily candle, and we're right back down into the wedge. The wedge breakdown at this point is going to be a breakdown below 177, and that should take us back down to 174, which is the previous high, and we do have the higher low, higher high, so we are bullish as long as we're above 174. If we can't hold 174, that's bearish, and we go down towards the gap fills below 170 and above 165. And if we get the bull breakout above 181, we likely start climbing higher towards 190. On ARKK, we were up 0.43% today, and intraday we hit the top of the Bollinger Band, and we're getting very close to filling that gap, which is the price target below 49. But we are starting to see increase in volume on a red candle day, which means even though we gapped up, we found a lot of sellers, so we may not go straight to that target. We may need to come back down towards this support zone at 45.7 and 44.6. If we can't hold that support, then look for a retest of 43. On the VIX, we were up 2.28% today, and the VIX is holding that support zone where we've been bouncing all year long, and I still think there's a very good chance the VIX is going to spike higher towards 16 to 17 and possibly even as high as 18 during the pullback that's coming around the corner. Keep in mind, this is not bearish as long as the VIX can stay below these critical resistance zones. It's simply just a pullback and elevated volatility during the time that we're looking for that higher low. On Bitcoin, we're currently trading just under this resistance at 38,000. This is the resistance the bulls need to break to get to that price target at 40,000. We still have the bull trend, and you can stay bullish above 37,000, but if we break that support, this is going to look like a multiple top rejection that's likely taking us back down towards 35,000. On Tesla stock, we were down 1.05%, and intraday we did break this resistance, and we continued higher towards the top of the Bollinger Band at 252, and you can see the price target at 255 is currently outside the upper Bollinger Band, which means we're going to need to bounce off this support right around 240, and if we can bounce off 240, then we can start pushing higher towards 255 as those Bollinger Bands expand. If we can't hold the support at 240, look for a retest of the low, which is between 234 and 230, and if we break 230, we have the gap to fill at 225. On Apple stock, we were down 0.54% today, and we're breaking down below this support at 190, and I still think there's a very good chance we've seen the local top in Apple, and we're heading down lower towards this gap fill at 186, which is also a test of the rising 20 daily moving average. So look for that support between 185 and the gap fill at 186, and if we break the high at 191.5, the next upside price target will be 194 and then 197. So jumping back over to the S&P 500, I think there's a very good chance with the PCE data coming out tomorrow that we could start to see volatility and break out of this trading range where we've just been going sideways since about November 20th. And again, we don't want to predict if we're going to break higher or lower. We want to let the price action do that talking. And the break higher is going to require the break of that July high. And the break lower could break support and start us towards our pullback towards the gap fill at 441. So be prepared for either of those scenarios and then simply let the price action tell you which trade to place. And as long as you're managing your risk around these critical levels, you should be doing just fine. We're absolutely crushing this market on Bank Trade Alerts, and you can find out how to join Bank by clicking on the link in the description of this video. I also have the Stock Channel Discord where you can get access to all of my intraday updates and analysis. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.